What's up, everybody? This is Jacob Sandoval from the DeRosa Group. I'm the head of investor relations, and we are a multifamily syndicator that owns just about 2,000 units and has distributed over $35 million of passive income to our investors. If you're someone looking to build wealth through real estate investing, you've come to the right place. In today's video, we're going to be breaking down the apartment building business, why apartments are such an attractive investment vehicle, how these apartment syndications even work, and we'll even walk through a sample real-life deal that the DeRosa Group has done so you can see the potential returns. So without further ado, let's dive in. The DeRosa Group has been around for 20 years and we exclusively focus on the apartment building business. And that's because we believe that the multifamily asset class has unique advantages that make it the ideal investment for long-term investors looking to build generational wealth. Specifically, we're going to break down 3 reasons why we love apartment buildings. The first reason is everybody needs a roof over their head, and we have a massive housing shortage in the United States. Depending on which articles you're reading, we have a shortage of around 3 to 7 million homes that's not going to be filled anytime soon. So this is basic supply and demand. When you have demand that continues to rise for housing in the United States, but a supply that remains consistently constrained, that is going to be a tailwind for housing values over the long term. And so multifamily, along with all real estate, is a very sound asset class from a macroeconomic perspective. Another key benefit is economies of scale. When you own an apartment building with 100 units, it's all under one roof managed by one team. This drives cost and efficiency in the operations that you do not have when you own 100 single family homes, for example. And this is another factor that makes multifamily investing so attractive as a long-term investment vehicle. Another key factor that makes multifamily investing so attractive is the concept of forced appreciation. When you take a single family home, for example, that single family home is going to be valued based on sales comps. What are other single family homes with a similar square footage and similar bedroom count in a similar zip code selling for? That's going to determine how much your single family home is worth. Multifamily, on the other hand, is a commercial property, and that's valued based on the income it is generating. So you can have a 5-unit apartment building that sits right next to another 5-unit apartment building, and they will be valued very differently because one can be generating a different income than the other. So when you think about what this means, it means that operators like the DeRosa Group are fully within control on controlling the value of the building. So if we can increase income through increasing rents or reducing expenses or a combination of both, we are able to increase the value of the building. And that value creation is what makes multifamily such an attractive investment vehicle for our investors, because we can buy a building that is undervalued based on the income it's generating, increase the income, thus increasing the value, and then multiplying that equity for our investors. On top of the forced appreciation, we will also be generating cash flow, which real estate is historically known to do much better than different asset classes. So those two combinations of forced appreciation with cash flow makes multifamily investment a very, very tough investment to beat when compared to other asset classes. So those are just some of the reasons why we love apartment buildings and why we are in the apartment building business at the DeRosa Group. And we take advantage of all of those factors to maximize returns for our investors. Before we move on to the rest of the video, I want to announce a free training that the DeRosa Group has prepared for our investors. It's how to quit your 9-to-5 job through passive syndication investing. If you want to retire early, or if you don't want to wait 30 years until you can finally enjoy your retirement, you need to start making a plan now. That's exactly what this training is, and you can get that training 100% free down in the link in the description below. Now let's talk syndications. Syndications is very simply a group of investors that are pooling their funds together to purchase a property that would be too costly for them to buy on their own. Here's how it works. The apartment building business consists of 2 groups usually. The general partners, also referred to as the GPs, like the DeRosa Group, and the limited partners, also referred to as the LPs or passive investors. The general partners are responsible for finding the deal, securing the financing, operating and managing the property, and executing that business plan through to sale. Essentially, we do all the heavy lifting. The limited partners, or the LPs, put up their capital to purchase the property. In exchange for that capital, they are entitled to a share of the cash flow and the profits when the property is eventually sold, and they get that without having to deal with any of the headaches of managing the property themselves. By partnering with companies like the DeRosa Group, you get to own a piece of a large, professionally managed apartment building, receive passive income, and benefit from all the value that is created, while the general partners do all the day-to-day work and heavy lifting. Now, to bring this video home, I wanted to walk you guys through a real life apartment building that we did not too long ago, DeRosa Capital 18. It is a 36 unit new construction apartment building that we are doing in Red Wing, Minnesota. We like Red Wing, Minnesota because it is about an hour away from the Twin Cities of Minneapolis, St. Paul, and we're seeing a flight to affordability nationwide where people are moving out of the big cities into the secondary and tertiary markets. So we're seeing a lot of population growth into the city of Red Wing. To run through the metrics and the returns for this particular deal, the DeRosa Group raised $1.8 million from our investors, and the returns that our investors can expect are an 8% cash-on-cash return. That means for every dollar that you've put into the investment, you'll receive 8% of that on an annual basis. So that's a cash flow you can expect. We have a 14 to 16% IRR, which means the annual return, taking into account the time value of money that you'll see over the life of the investment. And lastly, we have a 2.45 equity multiple, which means that if you invested $100,000 over the life of the investment, the cash flow, the appreciation from the sale, you'll get $245,000 back. So this exemplifies the power of the apartment building business, and we're doing deals like this all the time. That's it for the apartment building business. I hope you guys found that video helpful. If you're interested to learn about our current and future investment opportunities, we'd love to chat. You can book a call with me down in the link in the description below. We'll see you guys in the next video. Peace.